Thank you, everyone. Let us start with Lisa. Lisa, you are the latest entrance into the sector by being a fintech. Most of them are banks. Of course, ID is also from a scale of fintech. What are the kind of innovations in AI that you see coming into your space? And where do you see a lot of scope for fintechs to work together in this space?
So just to also, I think, set the record clear, Chexi enables people to pay with credit card where it's typically not accepted. So we started as a rent payments company that enabled people to pay rent on credit card when the landlord doesn't accept it. Now we actually, most of our volume is non-rent. So it's property tax, utility. Really what we're kind of going for is winning verticals where typically 90% of volume still happens on really old payment methods. So things like EFT, check, so on and so forth. And we've launched about just under 3 years ago. We're processing close to $1.5 billion now. Hoping to finish the year at $5 billion. I would say there's two areas of AI in payments that I am thinking about and closely watching. One is related to us today, but not so, I think, related to the consumer experience, and then the other is directly related to consumer experience, but not so much impacting Chexi today. The first one is how much AI can streamline operations of a payments or a financial services company. If you think about these type of companies, typically, historically, and I come from Square, I used to lead finance and strategy at Square Canada. They have massive payment operations, fraud analytics teams. These are some of the, I would say, heaviest headcount departments in some of these companies because you're moving so much money. Inherently, there's so much risk, so on and so forth. I think AI is completely changing, the way that you build, I would say, a payments or a financial services company, which is obviously much easier for a company like Chexi. I can tell you at 1.5 billion, we're a team of 30 people. And, we have a few people in data and fraud. And I would say, when I, in my prior roles, you would probably see headcount twice as that, if not 3 times of that. Actually, an hour and a half ago, I don't know if any of you followed this, but Block laid off half of its people. So Jack posted about this. They're making a 50% reduction in their workforce today. So it's this is great for companies to build lean and build, I would say, fantastic teams. But obviously, what happens to all these people, and then where does, I think, that talent goes? That's a big, I think, more philosophical question mark. I think in terms of, AI experience, when it comes to, consumer experience, where we're seeing the most development is agentic commerce, which doesn't really have that much impact on my verticals. I'm starting in the verticals where people are still paying with checks. Forget about agentic commerce, you know what I mean? We're just trying to bring digital payments into industries where it just don't exist today. Obviously, if you are, targeting retail or targeting these more discretionary spend verticals, that is why you see Shopify and Stripe, et cetera, partnering with, kind of AI companies like OpenAI, et cetera, because agentic commerce will be the future of commerce, and that will impact, I think, a lot of things. We're not seeing that impact checks today because, again, I think we're targeting verticals where we're still trying to move away from paper.
Super. And you briefly touched upon agentic AI. Maybe we will come a little bit later on to the agentic AI piece as well, because that is something that is making a lot of rounds in the financial services spaces. And at the same time, the compliance leaders I should also be very concerned about how to build around the rules of compliance around the agentic AI framework. So I will look at doing mostly from the risk management and compliance perspective. And you have been seeing a lot of range of technologies in AI coming into the space, especially with agentic AI on the recent one to join the bandwagon. What are the kind of threats you see with AI?
I actually see it more of as an opportunity, but to your point about threats, actually, before we go into that, a bit of background on Pluto as well, in case that you're not aware. We're Fintech, we're an automated AP/AR company. I actually had a payment strategy and compliance, so I deal with the regulators. And Pluto's been around for a while. We move about 1.9 billion a month in volume, so it's quite a bit. Biggest problem, I think was already mentioned earlier, right, by Lisa. It's for us when we scale, it's the deploying the manpower, right? You have more volume that comes in, you need to throw more resources at it. So to me, there is threat, because if you think about agentic AI as an opportunity, there's agentic fraud, right? It'll evolve as well. So you actually need to counter it with agentic agentic system to be able to counter agentic fraud. So there are, I would say, more of an opportunity than risk right now. And the big opportunity would be like in scale, right? So when we think about scaling, one thing that comes up to my mind all the time is how do we scale the compliance and operations team? Is one of the biggest problems we're trying to solve. We're growing volume. How do we scale? And a couple of things like come to mind. One of them is being able to deploy, from a transaction monitoring perspective, even being able to deploy a number of different methods, like looking at behavioral aspects, looking at historical patterns, looking at everything, velocity, burst in volume, all of these things together holistically, along with like IP addresses, even the speed of you controlling your mouse, the keyboard, all of these things holistically together in a fast amount of time. And with real-time rails coming on board, which I believe will come, it's going to come, with it coming on board, it becomes a larger threat and opportunity as well, because now we have to be able to manage that volume and load in real time, right? So I think it is a threat. Agentic fraud is definitely a thing that we need to be prepared for, but right now it's more of an opportunity for us in compliance and risk from a fintech perspective, because it'll help us scale.
Super. And you have spoken about a lot of opportunities there. What are the gaps that you think AI is yet to fill from your functional perspective?
So we can talk a lot about the opportunities. The problem is being able to actually, deploy them and use them in real life. And there's simple examples to be able to lower the amount of manpower needed to scale the team. So things like even when you file an STR, a lot of the times you have manual people reviewing them. I feel like there's a lot of things that could be missed as well. If you have agentic AI being used to be able to figure out, hey, here are the gaps and the anomalies, then being able to summarize it in a very cohesive and understandable way, being able to, sure, we need the compliance team, my team would need to review, but it's a lot faster, and just being able to plow that through, and then automatically I can hit a button and it just files the SDR. Right? Something as simple as that would help. KYB, when you look at being able to KYB a data, there's still a lot of manual work that happens into KYBing and KYCing the customers. So being able to amalgamate everything in one, report on it, being able to even right away be able to score. And we have used systems exist today, just not every fintech uses them right now. Being able to do a risk score, you can go in and intervene and like change the risk scoring, and being able to configure how the scoring happens. All of that, even the auditability, all the stuff, a lot of fintechs don't use that today, and I think that's like step one, is to being able to do that. Another thing, so transaction monitoring, we talked about the behavioral side of things, amalgamating network analysis. Think about the power of, we have 14,000 customers, over 14,000 customers in our ecosystem. All different geographies, they're everywhere. They have their different MCC codes or different types of businesses, right? To be able to collect and see the patterns of different segments and saying, hey, this is an anomaly. Normally we see the construction vertical processing transactions of this nature and this size and doing it this way, but here's the anomalies. It's hard for us to do that, very difficult. So those are the areas where I see mass opportunity. As we scale even more and grow, we can deploy these AI benefits to helping us automate, and not, instead of hiring more people, using the system.
Super good. So I think a very well point taken that the opportunities that exist are too many. You have to start taking it one by one. And already the payment sector in Canada is already looking at the next wave of technology through open banking and RDR. So there is definitely a lot to gain out of both these technologies that are going to be adopted in Canada. I think Kushank has been working very closely with banks and financial, as a banker into the area of open banking and RDR. So, since you have been looking into a combination of both these going together, what kind of role does AI have to play when it comes to taking the opportunity of combining the benefits of both RDR and open banking? How do you see them going together and aggregate with AI?
Great question. I think it's a consulting question, but I will still offer this for free. So guys, I'm Kushank Rastogi. I work at TD Bank, and my focus is on emerging payments. And most notably, I lead e-transfers, commercial e-transfers, and real-time rail, as well as bill payments for the bank. And when I say I lead those, it doesn't mean that I lead everything. I lead, you call me as a chief product owner of that particular products, where I make sure that the customer, voice of customer is being heard and getting solved for. So before I answer that question, I think it is very important to understand that where we approach the problems in TD Bank. TD Bank, as perhaps many of you can see from our branding perspective and experience, we are obsessed about customer experience. And there's focus on us customer experience, there's obsession of customer experience. And when we say we are obsessed about customer experience, we hear them every single day. It hurts when a P2 incidents happen for those who can elaborate more on P2, it is when e-transfers goes down, right? And sometimes it happens to everyone, right? E-transfers goes down for many reasons, maybe outside of control of the bank. It hurts us that 25% market share bank customers are unable to send an e-transfer. Important payment product in the market. It hurts us when somebody calls us and say that, hey, I've been defrauded or frauded by someone, and impersonation fraud and romance scams. It hurts us when somebody calls us and say that, hey, I don't want to talk to that person. That person is sending me an email money transfer with a message which is abusive in nature. These are fundamental customer problems that we are obsessed to solve. And that helps us to find answers. And AI, we believe, can help us find those answers in a more efficient manner. Coming to open banking and RTR, I believe, is the foundation on which the more secure way of doing open banking payments will happen. I will not be shying away in saying that open banking right payments must happen only after RTR framework is established in the industry. And that's why I see that the correlation between RTR and open banking. RTR builds that foundation in the industry, the common understanding in the industry, the risk liability framework in the industry for use cases like open banking payments to exist. Imagine a world where a trusted third party will be able to move money between two bank accounts. Example, most of you must have seen in other jurisdiction. I will speak about India. In India, the trusted third parties like apps, the pays, like the Paytms, the Phone Pays, the Amazon Pays, the WhatsApp Pays, they're not financial institutions. They don't own the bank accounts. But these are trusted third parties by their customers to enable money movement from one bank account to another. That's what open banking is in gold standards. Why it is happening? Because there's a framework at the back end which is enabling the banks and trusting them trusting these third parties to make that right payments happen. So I must say that RTR is a foundation, and RTR is not only about real-time payments. And most of the folks here who are working with me on RTR may agree with it. RTR is real-timeness is one feature of the 7 features of RTR which is bringing. So people who are thinking about RTR as real-time payment, just stop thinking about it as a real-time. We already have real-time payment. It's called Interact e-transfers. But about how it is going to enable this new foundational use cases, which we haven't seen yet in Canada, it is because of that framework that is getting established.
Interesting. In fact, it will throw light upon a very important point that RTR should precede open bank. And that is something very, very critical, because ultimately we are talking about a digital public infrastructure, DPI, which we call as, and the world is moving towards creating the DPIs of the future to empower banks for financial institutions. And today we are talking about banks interacting with each other. Tomorrow the DPI which is going to be established is going to also work towards creating a common financial services infrastructure across banking, insurance, capital market, asset managers, and each of the financial institutions together. The world is moving towards that. You know it much better to the conversation. And of course, we have Interact with us, which is already working very closely on the ITO framework for Canada. And not only Canada, in fact, we have got even representatives from UPI, National Payments Corporation of India. They initiated the first instant payment rates here as well. We have seen a lot of learnings from different markets. So, Samir, from your perspective, what kind of learnings can you get to take this RTR framework to the next level? Now, you operate across different categories of banks. On one side are the most accurate banks like the Chinese of the world. On the other hand, you are also working with the credit unions of the world. How do you create this infrastructure which can be very helpful for each one of this sector?
Yeah. So before I answer that, so I'm Zamir. I'm with Interact, and I actually run or lead our strategic partnerships division under innovation. And so, as it relates to RTR and actually all the advancements that we're kind of seeing, it just reflects or represents the evolution of trust networks. I kind of think of even Interact just being, our first trust network was in the debit, so ATM POS. So really creating trust in hard lines, so like between cables, between machines, and then e-transfer being trust between our participants, so that being the major banks and credit unions. And then if you think of RTR, it's really expanding that trust to trusted third parties. And then as we go into agentic, it's maybe potentially foreign parties. And so what I think we can learn is really about how do we naturally evolve our trust networks and critical infrastructure, but still have the same security standards, level of expectation around like everyone is operating under the same goal, which is supporting the customer at the end of the day. Because I think that's why payments in Canada has largely been well trusted, is because at the end of the day, as a customer, as a Canadian, you know someone's gonna help you, gonna support you, and you're not gonna be holding the bag. And a lot of what we're looking at is really, I know we touched upon agentic commerce, but I think RTR sets these frameworks around these trusted third parties. As we look to new use cases, it's actually how do we trust unknown parties as well? Because we're introducing new parties like agent owners, and we have to be able to validate, who are these folks acting on behalf of customers? Are they actually, good bots, bad bots? And then are they acting in the right intention of the customer? Do they actually capture the right intent of the customer? And I think a lot of the innovations that we see are on the front end customer experience, but really hasn't translated really well on the back end, like liability and fraud controls or even the governance around that.
Interesting. When I talk about Interact, now looking 5 years ahead from today, okay, what kind of innovations do a company like Interact see coming from the AI perspective into the Canadian ecosystem now? What are the thoughts behind those kind of innovations that is nice to have or must have for the company like Interact?
Well, so it's interesting. I would probably say the innovations that you'll see are likely run by these two ladies here are going to be the market. We're hoping to build infrastructure so that the market can innovate on top of it. So I think for us, it's really about how do we evolve our existing products, converge where we can establish trust between our product lines. So Interact operates, debit, e-transfer, verified, and we just launched Connect, which is an e-commerce payment solution, as well as a user wallet. And so I think for us, our job is to be able to act as that consortium that provides, intelligence to folks that need to be able to guarantee trust between two parties, knowing that not one entity has knowledge across the whole ecosystem. Like fraud is a global game, and I think what will end up happening is you'll start to see consortiums of consortiums of consortiums forming, because it doesn't really make sense for businesses that aren't in the business of just fraud to establish all of this overhead. And I think we'd probably get into similar situations that you see in the credit union market, which is like there's over 300 credit unions and they each pay for the same license and things like that, which is why I think you'll see a lot of consolidation in a few of these industries. And so I think for Canada being the market size that we are, the better that we can collaborate or focus as an ecosystem and build trust in that and sort of like these consortiums, which is like usually not one entity, but how can we all play with the same rules at the same level, will serve us a lot better.
I think you make a really great point. Like today, building the infrastructure that we have right now is like, we have no business talking about AI. Like, can we get real-time payments? You know what I mean? Like and by the way, Interac is not real time. You know, it doesn't move real time. The consumer thinks it's real time, but the money doesn't actually move. So the infrastructure that we're building on is actually like built 40 years ago. So for us to innovate and build great products is very, very hard. It's like there's a cold start problem. It's very regulated, and I think it should be regulated. But beyond that, I think like banks and Interac, and obviously the government, play a crucial role in how much we can improve financial experience for consumers in the coming years. I think we've all been talking about this for a really long time, and it's interesting for me because you hear TD talk about how much we want to deliver a great experience, which I think I definitely agree you probably do, but really the banks are being the reason that all of this has been slowed down, not to be the controversy here, but like realistically we would have had that many years ago potentially if this has gone to play, and I'm excited. I'm hopeful. I've been hopeful for the last few years, so again, I don't know if that's going to happen, but I'm hopeful to see a true change in this market, because if we truly are passionate about delivering a good consumer experience, that is what's required to get us there.
Okay, so understood. It's not real time. I'm aware, fully aware. Been in payments for a while. But to answer your question, again, I'll take the customer lens. When we go to a client and say that, hey, we are TD Bank, and what are your payment needs? We don't necessarily say that we have RTR, or we have e-transfers, or we have credit cards business, or something like that. We actually look at the customer pain point. And we don't necessarily look at that, oh, RTR will actually cause a liquidity problem for us, we'll make less money out of this. No, we don't look at that at all. We look at the factor that how we can solve a particular customer need. I'll give an example. RTP in US is live for a while. And TD AMCB, which is the TD US arm, is been adopting that for a while. I'll give an example of how we approached there. And so we have a TD Auto Finance business in the US, and they have a lot of partnership with the dealership there in US. The dealership actually came to TD Bank and say that, hey, we have a problem. We have a problem where the customer comes to us to buy a car. And in typical US market where our presence is, which is New Jersey and the East Coast side, people make instant decisions about buying a car. And they want to get out with a car. But the payment process is stopping them because the whole process takes a day or two. Say that how we can make it faster so that we can close the deal. That was the first use case. That has nothing to do with float. That has nothing to do, we just listen to the customer. That was the first use case we did. We implement RTP to disburse instant loans, auto loans to our dealership customers on the business side. And that flourished. So what we are trying to say here is that there is not a bespoke work stream at TD which is thinking about how we can monetize RTR. There are many work streams at TD which are hearing the voice of the customer on the street and saying that, what is your problem? We will solve it. RTR could be a means to solve your problem. You want payments 24/7, even settle on weekends? Perhaps RTR is a reason, is a solution. But if that's not a need, maybe EFTs may work. Right? So that's the approach we take. And I do believe that RTR is about instant settlement between FIs, which reduces the systemic risk in the system and enables limit raise. So limits will be higher. So think about the features of the RTR. Settlement instantly, higher limit payments, more data with the payments, expanded access, so you're no more limited to the Interac ecosystem. There are more participants coming in. There is fraud, centralized fraud systems, which actually reduces the risk of fraud in this ecosystem. And there is enablement of travel rule for international payments. Think about these features and marry it with the customer needs. The use case will erupt. And I always say in any forums I speak, don't ask me the use case of RTR because I don't know. What I know is a customer problem, and maybe RTR can solve it better than any other payment rail.
Interesting. Ultimately, it is not a solution searcher for a problem. it has to be a proper a solution that actually solves the problem. Correct. So you have to identify the kind of problems that a customer has and then hold them on. That's super. And you have spoken about customer satisfaction, customer requirement, and uh, everything revolves around data. Ultimately, the people who actually control the data will automatically have a total control on the customers as well. So, from the data perspective, how the payment sector is evolving with the usage of data and deriving better customer experience economics.
Well, I was gonna say we play the middle role, so like the data actually isn't ours. So we have a different perspective because most of the data that passes through us isn't ours, and we can only use it for a limited number of functions, which is really just operations and fraud. And so when it comes to fraud, it's really about how do we democratize the intelligence that's derived from that to our network participants to increase security and safety within the system. And so that's why I talk about the consortiums of consortiums, because really it's an ecosystem lens. So TD may have one view of the customer, but not the other side of the transaction. Or they may have a customer that's really bad, but goes out to another bank and tries to do the exact same thing. That bank doesn't have history with that customer, and so that network effect definitely strengthens trust. So for the data side in our world, a lot of it is not going to be bound to us. It's really just about how do we help and support our participants. And so risk scoring, fraud scoring, and trust, and also, you know, risk list is going to be where we focus a lot of that efforts on the data that passes through. But I'm sure you have more insight on the customer using features.
I think we have to understand the data. Like I only speak in the context of payments because data has many usage, and there are need-based payments and there are want-based payments. Need-based payments are, I want to pay my mortgage. I have to pay my hydro bill. These are need. You have to pay this to live. The want-based are commerce payments. I want an iPhone. It's a want. You can live without a phone, right? So what TD is or any bank with customer end-to-end relationship is in a unique position of understanding the overall financial picture of a customer. We understand what the liabilities of a customer is. We understand what are the assets of the customer is. And we can personalize the experience around payments better for a customer whom we have a 360-degree view. And that's, we believe, personalization on the digital front is very important as it relates to payments. And to the matter of fact that if you think about the pay by bank initiatives that have been taken through the help of Connect, the underlying principle is this: it's about being present at the checkout phase, more front and center, but you should also be telling the customer what is the right thing to do. Maybe if you are on an Apple website and you're trying to get into the bank environment to pay, we will tell you, hey, you have upcoming bill coming in for hydro, and you may be out of funds. Do you want to go ahead with this purchase? If yes, there could be alternate options. A line of credit, or maybe a credit card payment versus on a debit card payment, things like that. This is the simplest use case I can say. But the fact of the matter is that a customer view of his life, what's the insurance you have, what's the auto loan you have, what's the mortgage you have, and how much money you make, what are the bill payments you have to pay, what's your credit card payments, is important to create those personalized payments experiences. And potentially with open banking, this could be shared to external third parties or trusted ones where the customer wants to see this view versus just coming to the bank environment to get this personalized experience.
We have heard a lot about data. We have heard about personalized experience. From the governance perspective, with AI coming into the picture, and you're thinking about so much of reliance on related AI, data, and data privacy, which is another big area of concern. What kind of emerging trends do you see in the area of compliance, especially with AI coming into the picture?
Are we talking about governance or just, I think I can talk about maybe the governance framework with AI, because that's a huge one. We talk about AI a lot, but what do we need to consider when we start deploying AI, right? I think so from a governance perspective, I kind of look at it like an implementation cycle. There's a whole phased approach, right? You have a business, every time you're looking to deploy AI in your company, you're looking at the business, what's the business objective, a business plan, like why are we using it? We look at the data, is the data clean? The data that's coming in, is the data clean? Are we looking at the privacy aspect? Do we have consent to the customer? It's really important. Do they actually know how you're using the data? If you're using tools, do you know how you're using it, what data you're using, and is the customer aware or your client aware? It's really important. And then you look at the model, building out the model. The documentation piece is huge. When you look at even friction, when you think about friction and the compliance and AI and whatnot, like the documentation alone and understanding how the model works. If the model gives you a false positive, if it gives you if there's anomaly in the way that it's spitting out the data, do you know how to change it? Is it documented? Is there change management with it? Are you doing bias validation and testing, right? So all of this, like a whole life cycle, when you look at deploying AI and governance, I think that's a key thing right now when we think from a compliance standpoint, as your companies look to deploy AI, there's a whole life cycle approach that we need to take. And it's iterative, right? Like you would monitor and then iterate, and needs to be documented, and the whole thing again. So anytime, even when you're looking at third party or other companies, a lot of fintechs will look at plugging into other companies to be able to deploy AI. You're not, that responsibility still stays with you. You need to understand how the model works. You need to test it. You need to make sure that if there is an anomaly or it's not working the way it's intended. Let's say it generates 40%. Like 40% of your transactions look like SDRs, right? And there's obviously a gap there. Can you stop it? Are you able to fall back to a rules-based method? There's all these things to consider as you look at AI and governance. And I think, I think the first step is just, if you can't answer the question, do you understand how the model works? If there is an anomaly, there is an exception or anomaly, do you know why? Can you change it? If you can't answer that, then that's a problem. Can't use it.
And with stable coins and digital currencies making a lot of advent into the payment space now, from the trade finance to that of SME payments or whatever, global payments and remittances, big wave of digital currencies. As a risk management head, as a compliance head, how do you view it from the Canadian perspective, which has been very, very conservative for some time now? Canada is also looking into creating its own digital currency, digital Canadian dollar. So, from your perspective, how do you see risk building frameworks around stable coins or any other digital currencies? How has it been going?
I think one of the things we do, like enterprise risk management, we look at evaluating just like when you look at new products, new features, the first thing we do is kind of bring in the enterprise risk management committee, have all the stakeholders at the table, all the leaders at the table, kind of evaluate what the risk is to each function. That's always the beginning, the first start that we do. So ERM would be the first approach. If we were to deploy stablecoin, what is the impact across operations, across like data team, across technology, across everything? What is the use case for it? Does it outweigh it? And just, I guess, we approach it the same way as any new product, or any new feature, any new change to the business verticals, things like that.
Any changes with stable coins and digital currencies in your bank of business?
So it's interesting because I think, stable coins are so hot. They're so in right now, and everybody talks about, use of stable coins. My opinion and my kind of experience having, talked to our customers, we have never had a customer come to us and ask us to pay with a stable coin for their rent today or for property tax. It's just not happened. We're a small company, we're dealing with like 40, 50,000 active customers, so certainly not like, tens of millions, but it's just not like for a consumer, they're not really thinking about that just yet. And frankly, I would say domestic value of stablecoin payments, especially assuming we get RTR, is unclear to me. That said, I think stablecoins do play a massive role in international remittances, and I think that is where we will see the vast amount of change. So for us, we don't do international remittance today. This is something we might consider kind of in the future. But it's not really impacted our business. It's actually, we've seen landlords request that more than their tenants. And I think, again, I think it's like hot in business community to talk about it, but the domestic consumer impact of stablecoins, like most people, the average consumer doesn't even know what a stablecoin is.
But just to give you a little heads up, if you look at the immigrant population coming into Canada, okay,
For sure.
it's a very big opportunity, especially when in Middle East, in countries in the Caribbean, in Japan, these are all quite popular. And in the future, time is not far. It's probably because Canada was a late entrant into the digital currency framework, is because the folks are not much involved. But with a little bit of easing, I think you will see a lot more.
Oh, I think like I said, international remittance, like moving money or to even pay rent domestically, like moving money from India or somewhere here. I think there's a massive use case here. We actually can only serve today customers who are like presently in Canada, have a Canadian driver's license. Like we have pretty strict compliance rules around that. So I would say in the future, I definitely see this impacting us, but I think the companies who are going to be mostly impacted and most be able to take advantage of that are going to be companies like Wise, et cetera, today that are actually known for remittance.
And Pluto, because Pluto also does APAR, and there's a cross-border remittances, and about 10% of our volume is actually cross-border.
And it's B2B, right? So you have big payments, which you save a lot of money on.
That's right. So it's a speed, right? Again, back to the problem that we're trying to solve is the speed of cross-border payments. That's what it can do. So it's not so much selling stablecoin to the customer, like, hey, we accept that. It's more, you've got international remittances, we can move it faster. Stablecoin is the how we're going to solve that.
Yeah, and I do think that RTR will help from a business standpoint for like real-time money movement, because Interact, like, again, doesn't really have a consumer problem because the consumer doesn't struggle about moving like $50 to each other, but businesses do struggle with real-time payments without it, because obviously they're operating at much higher ticket sizes.
Yeah, the only thing that I'd probably add is maybe the Canadian stablecoin aspect is more of a sovereignty play at this point, at least domestically. So do we, I think geopolitical situations have accelerated the need for countries to think about their own domestic stablecoin or payments infrastructure or liquidity pools. And so do you want to be forced to adopt and accept and use a foreign stablecoin as your own? Jury's still out. So I think based on that, that's probably going to accelerate the need for something in Canada, but I think it's going to be more of a sovereignty play versus an end user or retail play.
But from the stable point to here to stable is going, once that has become much more simpler, I think this opportunity will probably come up much better. Probably we can just wait for that. Before we end the session, one good wish list from each one of you, so that we can take back some food for thought that the folks in this room can work from home.
I wish that RTR launches finally. And oh, you took. Sorry. Okay. Now I can't take it back.
That is one Canadian wish all over.
And I really wish that the industry embraces it. That is also important.
I know that there's a lot of talk on open banking and RTR. A lot of what I do is in the agentic commerce side, and so my one wish list is that there's a lot of partnerships that are being announced down south, and we've talked to all of them, and a lot of their roadmaps don't include other jurisdictions. And so what I kind of wish is that Canada gets on the map and showcases that we have the ecosystem coordination to actually roll it out more successfully in our market, given our dynamics, and probably accelerate what truly agentic commerce looks like.
I think for me, I see a lot of other fintechs talking about embedding AI into their actual products, but I still think that the potential for embedding AI within like ops compliance risk, that area is massive, especially for companies that are scaling. So a wish list would be being able to deploy it through the whole KYC, the transaction monitoring, like the entire process and gather network data. Like that's the kind of the gold star. Would love to see that happen one day.
Super.
Does it have to be about payments? You know what? If it's not about payments, because I do think like my biggest payments wish for sure is like, yeah, I want read and write, access to open banking, I want RTR here, and I want the industry to embrace it. But if it's not about payments, if we talk about Canada and Canada's sovereignty, I for sure think like my biggest wish is that Canada produces more category defining companies. And the only way that that is going to happen is if the ecosystem, especially in financial services and on the government level, changes and embraces that change. Until that happens, we will continue bleeding some of our best and brightest talent down south, and that is very, very sad to see.
Superb. Thank you very much, ladies and gentlemen, for a wonderful session.